let's start with a conversation with Santosh Rao this morning. He's head of research partner at Manhattan Venture Partners. Santosh, great to speak with you as always. I'm going to start by asking your thoughts on the government shutdown. Are we reaching end of the road there? What is going to be the impact? Will US markets see this as a big positive? Because having said that, the government shutdown for the last several weeks, and I think this is the longest in a while, hasn't weighed too heavily on market sentiment.
Absolutely. Thank you for having me. Great to see you all. Yes, the government reopening, that will be a great news. We'll be all waiting for that. We've been flying blind, so to speak, for so long. There's no data. No one knows where the chips are falling right now, but I think this will open up the market a little bit. And this uncertainty on top of many other things going on with this layoff announcements and this and that, added to consumer sentiment, negative sentiment, I think that's what's playing on that side. So I think opening up the market is the first step, and then we'll start getting data, which unofficially, like the third-party data or independent data, is okay. The unemployment is the employment scenario is pretty steady. The layoffs are also not that much. Rather, the unemployment claims haven't gone up. So things are pretty good underneath the cover, even though we don't have any official data. So net, I think it's going to be a good opener. I saw the futures just before the interview. Futures are up, so I think it'll be a good day in the market tomorrow.
Okay, Santosh, good morning from where we are at. But then the question is, good day is one thing, but you've seen a little bit of a cooling off in all of those AI-led themes and those tech themes, and a lot of people asking the question as to whether that money now rotates into other markets. And I know we've been speaking about this week in, week out over the last couple of months in particular, but India, it's a market that has underperformed significantly all through 2025 so far. Does that mean a rotation into this market?
Yes. Yeah, there are two things. First of all, yes, the AI bubble, or so to speak, people believe there is a bubble of sorts. So that may be slowing down. The investment there may be slowing down, and the money is rotating out of there. So which is healthy. It'll broaden the whole thing. But AI has been leading the tech sector, and tech has been leading the market. So that cooling off will definitely be a negative here and positive outside, because with the rate cuts coming in, the dollar weakening, and I think the yields will be much higher outside. I think money will flow out, and definitely to India as well. Even though India has been always been an expensive country to invest in compared to other countries, emerging market countries. But overall, I think India is improving. Earnings should start improving. I think the whole issue with India was the earnings were not keeping up with the valuations. I think that was a big concern. So the relative advantage was somewhere else. But I think money will start flowing into India as well as to other emerging markets as things slow down here or reverse out. So let's wait and see. At this point, yes, the talk of excessive AI spending is there. There are concerns about getting the money back, the returns on this money. So all those things are playing in the market and slowing down the market. So that's what's happening. But let's wait and see.
Santosh, just one quick follow-up there. Is the larger chatter in the US around the AI valuations coming off, and are there repercussions? I mean, one way of arguing is that if the AI stocks cool off, then the broader markets in the US and maybe the rest of the world get a chance to get in flows, because right now the flows are going towards one basket. But could it have collateral damage in that initially when the AI hype cools off sometime in the next couple of months or later, then it'll take down all boats along with it?
Yeah, I don't think it's going to be that bad. I think right now there is some digestion going on. There's just too much money going into too few stocks, and that was really driving up everything and muddying the water, so to speak. I think the money is going to move around. There's a lot of onshoring that's going to happen. A lot of other sectors are going to take off as well. So I think there's a little bit right now. There's digestion going on with this uncertainty on top of that. I think that's adding to the weakness. But overall, the U.S. economy is still fundamentally still good. Employment is still good. Growth is still there. I think the last I saw, the GDP now data is now, I think 3 or 4% growth, GDP growth. So I think that's a good number. So overall, fundamentals of the U.S. economy is good. Valuation need to reset a little bit. So the money is not going to flow out automatically, but I think the trend is definitely working towards that, because right now too much went into this too fast, and now the things need to move out and rebalance themselves. So you're going to see some outflow, but not immediately, because the economy is still pretty doing pretty well.